stage 3 is once you get your funding, you don't just run off.
What?
Woo!
You don't
Like
do what?
they doing those IRS refund checks right now. Woo, girl, I'm going shopping. Oh, yeah, them refund checks come in, honey, they go out, they be done forgot what they were supposed to do, they ain't paid off no debt, they ain't put nothing in savings, they ain't made no, investment, eh, no
The
assets, they not thinking about assets, no cash flowing assets, honey, they going out and consuming.
consuming,
They
not
going out,
not
honey, they
turning that
going
money over to
traveling.
yeah, yeah,
They going to groceries, they buying
yeah.
clothes, they
Mhm,
buying a car that's depreciating. I mean, just all
mhm,
these things.
mhm.
Yeah. So, but
Yes,
stage 3, what we're gonna do, you guys, after we put that funding strategy plan together and we get you the funding, the 3rd stage, what we're gonna do, we're gonna make sure you have a deployment plan. Okay? A deployment plan. Okay, we're gonna remind you what you said. You said that you wanted to use this percentage for marketing. You said you want to use this amount for rebranding. You said you
yes.
want to do this to hire your VA. You said you want to do this much to buy your own equipment. You said so we just go back and remind you what you said you wanted to do with the money.
Uh-huh.
And then we make sure that there's a return, you can get a return on that money. And then we help you to put together your debt payoff plan. Okay, you have 18 months to pay this back. So how are we going to do that? Okay, we got to sell. All you got to do is sell 3 clients of this package at this price point, and you can pay all of this off. Is that understood? Yes.
Yes.
Okay, let's execute. And then we do a check-in to make sure that you have done that. Okay, periodically. Okay. So turning that capital into a return on
Yes.
investment.
Yes.
Okay, that's what's
That's
important.
powerful. That's
Okay, this is
powerful.
where businesses either win or they self-destruct
Yes.
because now you have the money. So the question is, can you deploy it profitably? Okay, because funding is the fuel, but it's not free money, you guys.
Yes. Not free money.
Yeah.
Not
And
free money.
yeah, 100%. So this is also where many businesses owners fail to track expenses properly as well, Miss
Mhm.
Angeline. What do you think
That's
about
right.
that? About that
That
capital and how you can, you know, um, capture those, what you're spending it for, and how can you take that funding and make your business look good? Because first of
that
all, it's not a taxable event.
it's not a taxable event, and however and if you what you're supposed to do, if it's a truly business loan, which most likely you are getting it for them as a business loan,
Mhm.
right? That
Yeah,
should be recorded in their business book, in their business accounting records. So it should be going in their books as a liability to be
hmm,
paid back, right?
yes,
And um, so that amount is being tracked, so it's not getting lost and it's set up to be paid back on time and the interest is getting recorded and the interest is an expense and a business deduction so you want to make sure you're tracking that as well um, and so you want to make sure your books are set up properly so that you're tracking that. So that's called bookkeeping. So if your finances aren't set up properly and you're not tracking that, you could be, setting yourself up for losing, deductions on your taxes and not recording things properly. You're not in compliance with your agreement because you're not paying it back on time. You know who knows what could be happening if your finances are not set up properly. Um, so for me coming in and talking about this on the perspective of taxes and as an accountant, there's some compliance there that you looking at your numbers, tracking your
yeah,
numbers, um, knowing what your debt to income ratio is,
yeah,
looking at that cash flow, making sure you're cash flowing to um, make sure you're having that revenue there to cover it.
Yeah.
on a timely basis. So those are the things you gotta think about when you're having this level of funding coming in, right? That you're taking
Yeah.
on
Yeah.
additional responsibilities, um,
Yeah.
so
Yeah,
yeah,
we had
so
a
it's
question here.
uh-huh.
Yeah, we had a question. It says, it says telemarketers calling and texting pre-approvals. And so I just responded in the
Mm,
chat here. I know Miss Angeline just said that, you're getting flyers in the mail, you're getting texts, you're getting
mhm,
emails. Everybody's promising, hey, I get them myself and I do funding.
mhm.
So I get them all the time, and I'm continually blocking them, and they still keep coming.
Yeah,
What in the world is going on in the world? And so this is the thing is that right now, people obviously, having access to funding is really a benefit of this country, you guys. I don't know if y'all really know that other countries don't have this type of benefit where we can get access to funding this easy, especially
yes.
as a woman, as a minority, as a small
Mhm.
business, all of these types of things, and
Yeah,
so we are privileged. And so what
we are
happens if you
privileged.
are privileged where it's pretty easy to get funding if you qualify. And so when you have this overabundance of access to funds, sometimes people abuse it. And so like I just mentioned here in the comment, I said pre-approvals. Listen to me, you guys. Pre-approvals are not promised funds,
Mhm.
okay? Pre-approvals are not promised funds unless you complete the underwriting process where they're validating your income. They're validating your actual credit score. They're validating what you have, what you relationships you have with other banks. They're validating the information, and then they will give after the writing process, give you the final approval, and then they will wire you the funds. But there is a underwriting process that takes place. So, like for example, if you fill out our application for funding, I can immediately give you a pre-approval amount. However, that just gives me a range. Okay, I just did that. Matter of fact, with a client just today, they were pre-approved for 70 to 90K.
Uh-huh.
However, until we validate their income, until we validate what their credit really is, because it's a soft pull, right?
Uh-huh.
We
Right.
validate they don't have something that's out there that's, whether it's a lien or whether
Right.
it's a court, something in the court records, something
Judgment. Uh-huh.
in the check system, something, some type of judgment. Sometimes we look at Experian, but there's something over there on Equifax that's not on Experian.
Uh-huh.
Okay. And
Right.
so different banks look at certain credit reports, all of the things. If you go back at our other episodes, we'll teach you all of those things. But so pre-approvals, like I told you, sometimes it's especially when it's mailers and when it's Texas, when they haven't even ran anything on you, they are just doing clickbait. Okay. That's clickbait.
Mm.
Okay, until they actually run your credit, until they actually you validate all your information and you go through an underwriting process and you get your final approval and they wire you the funds, then and only then do you know whether you're able to get the funding.